Namaste students. So today we are going to start the classes on cost accounting. So which you have in your second semester for BCom syllabus, which I am doing University of Mysore. So what exactly cost accounting? So let us understand about introduction of cost accounting. How cost accounting came into exist, or what was the need of cost accounting, or why we exactly need cost accounting when we have a financial accounting. See, whatever we have, everything will have their own limitations. So like financial accounting also had some sort of limitations. So some sort of disadvantages, so which made the cost accounting to develop. So now, what are those things which made us to, or made cost accounting to develop? So I have listed here under 5 points, so which are in the above, next to me. So under introduction part I have listed 5 points, so I always come up with points, so which you can easily remember and easily understand things. So the first point clearly speaks about cost accounting is a branch of accounting and has been developed due to limitations of financial accounting. So I said at the beginning, cost accounting came into exist because of the limitations or the disadvantages, few disadvantages of financial accounting. So point 2 clearly speaks about financial accounting is primarily concerned with record keeping directed towards the preparation of profit and loss account and the balance sheet. See, financial accounting always prepares about profit or loss account, so which we get to know about the business or under loss or under profit. At the same time, so we are going to do a balance sheet. We are going to prepare a balance sheet. So through the balance sheet, we are able to understand, or we are able to know the financial position of the company. So this is the major aspect where the financial accounting concentrates. So it is always prepared to know the profit or loss of the business or the financial position of the company. So that is why we prepare financial accounting. Next, look at the point 3, which clearly says it provides information regarding the profit and loss that the business enterprises is making, and also its financial position on a particular date. So as I said, P&L account, that is profit and loss account, to know about whether the business is running under profit or loss. At the same time, balance sheet gives us a clarity about the financial business or the financial position of the business. So if you look at in this particular aspect, so on a specified date, we can get to know with the help of these two accounts, that is P&L account and balance sheet. And point 4 clearly figures out that the financial accounting reports help the management to control in a general way the various functions of the business, but it fails to give a detailed reports on the efficiency of various division. See, it gives, financial account gives us the financial picture, whether our business is under profit or under loss, or whether our business financial position, whether our business is growing or not. So that clarity will be given by the financial accounting in a general way, but it fails to give a specific department, a specific division where we have to concentrate and where we have to avoid overlapping work or over costage or over expenditure, whatever is happening, that specification is not there in the financial accounting, which we get in a cost accounting. And last but not the least, point 5 clearly figures out that the limitations of financial accounting which led to the development of cost accounting. So because of these limitations, cost accounting has been developed. So now let us discuss in detail what are the limitations of financial accounting. What are the limitations of financial accounting which made the development of cost accounting. So under that, I have listed point number 1, no clear idea of operating efficiency. See, very simple, dear students. Sometimes profits in an organization may be less or more. It might be because of inflation or trade depression and not due to efficiency or inefficiency of the business or of the organization or of the company. But financial accounting does not give a clear reason for profit or loss. So that gives no clear idea of operating efficiency. What making the business going under loss? See, it is very simple. Every time you cannot expect the price remains constant. Price might increase. That is what I said it as a inflation. Or the price might get the decrease. That is what we call it as a deflation. So here that may be because of trade deflation or depression or inflation or deflation. There is a lot of variations happen. So that clarity will not be given by the financial accounting. That is what I have highlighted in point number 1. No clear idea of operating efficiency. So now let us move towards the point number 2, which I have highlighted here, that clearly speaks about weakness not spotted out by collective results. So obviously, financial accounting shows the net results of an organization when the profit and the loss account of an organization shows less profit or loss. It does not give the reason for it, or it does not show where the weakness lies. Because see, when you are running a business as a businessman or as a production unit, as a producer, I must know where exactly the weakness, because I have to work out on the weakness. So through that I can strengthen my, I can strengthen my capacity so that I can overcome out of that particular weakness. For that I need a specific weakness point. I need that spot where exactly I'm going weak. So the financial accounting will not give you that particular spot, because that only shows the net results, ultimately whether the business organization is running under loss or under profit. Next, thirdly, does not help in fixing the price. Obviously, see, in financial accounting we get the total cost of production, but it does not aid in the determining prices of the products, service, production order and the lines of production. See, product has to pass through many stages while getting a final shape of that particular product. So which exactly that fails? Here we get to know the total cost of production, but we are not able to get to know specifically or divided according to the different stages of production, so that we are unable to know about the expenditure of that particular production. Point number 4 clearly speaks about no classification of expenses and accounts. Everything in financial accounting, everything is noted in a general way. So that is, in financial account we don't get the data relating to the cost incurred by a department. How much cost is incurred by purchase department? What is the cost incurred by production unit? How much the cost incurred by selling and distribution department? So we don't get that kind of data in the financial accounting on a departmental basis. The process are separately or per unit cost of product lines or cost incurred in various sales territories. Further expenses are not classified As I said, there is no separate classification, which exactly we wanted to know. What is the exactly direct material cost? What is the prime cost? What is the cost of production? What is the cost of sales? So we don't get to know that bifurcated expenditure under financial accounting. So that is, we might not get to know which are all direct expenses, which are all indirect expenses. We might not get to know. So that is, which can be controllable, which cannot be controllable. See, there are expenditure which we can control and minimize the cost of production. Yes, of course, I do agree. There are expenditure which we cannot control. That is what controllable and uncontrollable expenditure. So that we can get to know with the cost accounting, but financial accounting, which will not give us the clarity of which expenditure comes under which overheads, and the value added in each process is not reported under the financial accounting. So which led to the development of cost accounting. Next, moving further, point number 5, no data for comparison and decision making. It does not supply useful data to management for comparison with the previous period and for taking various financial decisions, as introduction of a new product, replacement of labor by machines, price in normal or special circumstances, producing a part in the factory or buying it from outside market, production of a product to be continued or given up or closing down, priority accorded at a different products, investment to be made in new products or not. So we don't get us complete or clearance data for comparison decision making. There are a lot of decision as an investor, as a producer. I wanted to know. So I wanted to take few decisions whether my products can be produced within my production unit. What is the cost? If I buy the same product readily from the market, what is the cost? If I produce, whether I'll be under profit, up to what extent? If I buy it from the market, whether I'll be under profit or not? Whether I should increase production of product A, whether I should decrease production of product C. So I have to take a lot of decision. Whether I wanted to continue with the production, whether I wanted to close down or stop that production unit. So these involves a lot of decision makings, but for that we needed data, we need comparison factors. For example, now lockdown period is going on. This is a special case. So I must, as a producer, I must know what should be the expenditure incurred in a departmentalization or in department wise, individual department wise, so that I can take a proper decision. So that is not available. I cannot compare with the past. I cannot forecast the future. Just I have to refer it the past data which has been prepared by the financial accounting. That is one of the major disadvantages of cost accounting. No control on cost. Next point 6 clearly speaks there is no control over a cost. Financial accounting does not help to control materials, supplies, wages, labor and overhead cost. See, we always divide the cost into different factors. So if I get to know exactly the cost of each stage, so I can control some of the cost, because financial accounting does not give any clarity about the cost. So obviously that is also one of the most important disadvantage. So where that led to development of cost accounting. Next, coming to the 7th point, does not provide standard to assess the performance. So financial accounting does not help in developing standards to assess the performance of various persons or departments. It also does not help in checking that costs do not exceed a reasonable limit for a given quantum of work of the requisite quality. See, I need some quality of product. I need some number of products, some quantity of product. For that, I know what is the cost is going to happen. But in financial accounting, I don't get that detailed report which department made, how much cost, so which would have been, so our standard number, whatever the products I wanted to produce, what would have been the regular expenditure, what was the actual, what was the standard. So I don't get any data for comparison purpose. So moving on to the point number 8, clearly speaks, provides only historical information, because we all know that financial accounting is always prepared on the past data, which is data provided in the previous year. So with the help of that only we can prepare a financial accounting. So financial accounting records only the historical cost incurred. It does not provide day-to-day cost information to the management for making effective plans for the future. See, when I wanted to make a plan for tomorrow, I wanted to know the facts and figures of today. So that financial accounting cannot give that, because it is always prepared on the basis of past transaction, not on the present transaction. So with that past, by keeping that past, I cannot always forecast, because I need the present also to forecast something. If I wanted to plan something, obviously I wanted to know the factor about today's, what is the facts and figures of today, what is happening. So that I wanted to know to prepare something called budget. Next point, point number 9, no analysis of losses. So what is this no analysis of losses? It is very simple. It does not provide complete analysis of losses due to the defect material, idle time, idle plant and equipment, etc. In other words, no distinction is made between avoidable and unavoidable wastage. So as I said, there are factors which can be controllable within the production unit. There are factors, I do agree, which are uncontrollable, but financial accounting will not give us the clarity analysis of losses of that particular product. This is also one of the major disadvantages of financial accounting, which led the development of cost accounting. See, there might be over cost, but from where, what is the factor? Whether the machines are not working properly, whether the machines are not efficient, or whether the people who have been hired as an employees, so that is a labor, whether they are not doing properly, or I should know whether my plant is not proper, or the equipment which is provided is not proper, or the material whatever I am purchasing is not up to the mark. So as a producer, I should know. So that analysis of losses cannot be bifurcated by the financial accounting. Next point, inadequate information for reports. Obviously, financial accounting will give you summarized report. So that is always insufficient. See, it does not provide adequate information for reports to outside agencies such as banks, government, insurance companies and trade associations. They all wanted to know the detailed report, but financial accounting gives only a summarized report, which might not meet the need of those particular people. Next, the last point, so which is very, very important, and you must understand this: no answer for certain questions. So financial accounting, few questions remains as a question because there is no answer in the financial accounting. What are those questions? See, point number 1, should an attempt be made to sell more products, or is the factory operating to the capacity? Now the factory is working, factory is producing. So now, should that factory increase the production to its full capacity? So that remains as a question, because financial accounting clearly says whether your factory is under profit or loss, but it cannot give you a complete information whether the factory should work to its full capacity or not. So if you look at point B, if an order or contract is accepted, is the price obtainable sufficient to show a profit? Whatever order is coming, obviously when we are getting orders, there will be a bargains, there will be a lot of bargains. Whether that a bargained price is going to work with our business, with my production unit or not. So I must know about that particular thing. So next is, if the manufacture or sale of product A were discontinued, product A if I discontinue and effort make to increase the sale of product B, what would be the effect on the net profit? See, very simple thing. If I decrease the production of product A and if I increase the production of product B, so whether I am going to get more profit than the existing, or my profit will be reduced than the existing, or I might go under loss. Will I get this information from financial accounting? No. So next, point 4 clearly says why the profit of last year is of such a small amount despite the fact that output was increased substantially. So we are increasing our output, no doubt in that. But even though after increasing our output, why the profit, whatever we are earning, is still a small factor? So that is also another disadvantage. So if these 4 points, whatever I have made it as A, B, C, D, that questions cannot be answered by financial accounting. So the above listed 11 points led the development of cost accounting. So let us stop here, dear friends, and we are going to continue in the next video. Until then, bye bye, take care, see you soon, stay home, stay safe, take care, bye bye.